is not just the lockdowns in China, but that technical, the dreaded death cross.
Yeah, and that death cross is something that a lot of chart watchers pay close attention to. We haven't seen this since back to 2020. And what it means is when the 50-day moving average falls below its 200-day average, it is a major selling signal. It means a loss of short-term momentum, further selling pressure ahead, and that chart vividly demonstrates how the selling pressure really kicked in, particularly over the last couple of days, but mainly in the latest U.S. session. Trading in New York saw the close of near 82. Again, that's a significant drop. You're also looking at Brent crude. The pressure was there as well. To quote one senior energy trader, there's really no way to have conviction and want to place bets when the market trades in huge ranges with limited liquidity. That's a theme we're starting to hear a lot, limited liquidity. So the risk reward is just not there. And let's count the bearish pressures here. We've got growing fear that China's COVID zero policy means even more lower demand from the biggest consumer of oil. We've got a surging dollar, which is bearish for commodities in general. We've got the U.S. government cutting its annual oil production targets for the third month in a row. And that slimmer forecast really adds another layer of worry on a market dealing with unprecedented volatility since war in Ukraine unreached all of those sanctions on Russia, which is resulting in the limiting of gas to Europe. We're going to get to that crisis in a minute, but let's drop into the Bloomberg because the U.S. has its own energy crisis brewing on the West Coast. In California, you're looking at a dramatic surge in electricity prices and electricity use in California because of record heat. However, California has narrowly avoided for the second day in a row warnings of rolling blackouts. That has residents in that state very much on tenterhooks given the situation.